Good evening, everybody. My name is Kiana Danielle. We're going to have a webinar today about U.S. political review, focusing on the U.S. elections. Welcome, everybody. Before we start, could you please type in a Y for yes if you can hear me, and a double Y if you can see my screen. Currently is showing a screen with the title of this webinar, USD Crosses and U.S. Political Review, and my picture on the top. Welcome, Adam, Alex, Mark, Melissa, Veronica, Mohammed, and okay, thank you so much for your interactions. All right, everything is working. Thank you for interactions. So this definitely is a live webinar. If you have any questions, definitely do ask me in the question box. Try to cover it in our one hour webinar. So before we get into the webinar, let me just show you this screen, which shows the risks of trading and investing, especially if you trade on margin. Margin is basically the leverage that you use, the money that you borrow from your broker when you're trading. And of course, the goal of this webinar today is to identify some trading strategies based on the U.S. political, overview and the next couple of months with all the volatility. So please do keep in mind that if you use leverage, you definitely will increase your chances of winning, but equally your chances of losing. And so definitely have your risk appetite and risk tolerance in mind when you trade on margin. On today's agenda, of course, we're first going to talk about U.S. elections. How many people do we have today from the U.S.? So I don't want to be repeating myself because I'm pretty sure that in the U.S. most people are very involved. So any people from the U.S. in the crowd? All right, we have 1, 2, 3. All right, so we do have Americans in the crowd. That's good. For those of you who are not from the U.S., I'm just going to give a little bit of a overview and what's going on, why there's volatile times politically. And we're also going to take a look at historical markets performance under, Democrats and Republicans, which are the two parties, political parties in the U.S. And then, we're going to talk about the two candidates' economic policies, and then we're going to do a little bit of a technical analysis and develop potential strategies for trading the U.S. dollar crosses. So first of all, what is going on in the U.S. politically is that it is election year. Election happens every 4 years in the U.S. There are two parties, the Democrats, the Democratic Party versus the Republican Party. The Republican Party is mostly known for being conservative, while the Democratic Party is known to be a little bit more progressive. And right now the candidates have come down to Hillary Clinton, which is a former First Lady. She is the wife of Bill Clinton. And we have Donald Trump, who has never been in the politics and is we'll talk about his personal life a little bit later. So this is what's going on. And the election is going to be in November. We have less than, around 70 days until the election day, and there is a lot of controversy going on, and everybody, a lot of Americans are really involved in the politics. The markets, right now it's summer, and the summer, it's August 25th right now, so it was a little bit on the lazy side up until now for this month, because a lot of market participants were taking vacations, but we believe that starting September, we're going to see a little bit more volatility in the markets based on the elections. Well, there's obviously a lot more going on in the world, and we also have the Federal Reserve interest rate hike potential coming up as well. We had Brexit, so it's a little bit of a very controversial times for everything, politically and economically. So what's going on? Who is Hillary? Who is Donald Trump? This is just like some basic facts about the two leaders of the two candidates So Hillary Clinton, she's a Democrat. She's 68 years old, from Chicago. Well, she ran for presidency against Barack Obama in 2008. When she lost, she became the Secretary of State. Before that, she was a First Lady, and she was the first female partner of her Arkansas law firm. And then we have Donald Trump. He is 1 year older than Hillary. So the interesting thing is that if either of these people, I mean, when either of these people win, they are going to be the oldest person to ever become a president of the U.S. So that is an interesting fun fact. And he's from New York. He was not a politician, which is actually one of his appeals to his supporters. He is a billionaire real estate tycoon, and he is also a reality TV star, basically same category as Kim Kardashian, if you might know. And with their politics, well, Hillary, she has been a long-term Democrat, and she has been working on healthcare reform plans when she was a first lady, and well, being a woman, obviously she's had strong support from women Democrats and minorities. And as for Donald Trump, well, he used to be a friend of Hillary and Bill Clinton before he considered running for president. And his children are known to be Democrats, but now he's running for a Republican Party, and he is considered on the right of the mainstream Republicans. So he's a little bit more on the farthest right of Republicans. And he is mainly popular among well, white Americans. Well, this list I got it from AFP. It says from white working and middle class. There was a new poll coming out and saying that he's actually even more popular among rich Americans, rich white Americans, while Hillary has 99% support of African Americans, about, I believe it's above 90% of Hispanics and immigrants, while Donald Trump supporters are considered mostly white American, right? And so what are they promising? Well, so far, I mean, Donald Trump has, this is a little bit older, this is about 2 weeks old. Donald Trump has changed his policies a little bit, but Hillary has been promising a gradual reform of Wall Street. Well, she is going to tighten gun laws, wants to expand university scholarships, and she wants to do a reform on immigration to simplify citizenship for illegal immigrants. While Donald Trump, most of his policies are well, goes against immigrants. He wants to build a wall on the Mexican border of the U.S. He wants to make Mexico pay for it. He wants to deport illegal immigrants. He said before that he wants to have a complete shutdown on Muslims, and now he's saying he didn't say that, so we don't know really. He wants to stand up to China, whatever that means. We're going to actually get into detail on how it actually could work, what he says economically for the U.S. And well, his biggest promise has been make America great again. And well, we don't really know what he means by again because well, America, well, we don't know which era he wants to take America back to. And so, and their reputation, I mean, this is a very simplified. They both have a lot of controversies. A lot of people hate both of them, and there are a lot of personal attacks on both candidates. So, economics. We're here less to talk about the politics, but more about the economy, because that is what is going to actually change the direction potentially for the US dollar, which all of you, I'm very sure, are interested in learning more about so you can trade. So simply put, based on, well, if you read the economic news, most economists think that Hillary would be far better than Trump for business. In fact, so they pick the libertarian candidate. There are other candidates, believe it or not, but they're not as famous. So there is a libertarian candidate, Gary Johnson, and economists think that he is the second choice, and based on this new survey that was done by CNN Money. And so the survey was basically polled from over 400 experts on the economy. And so Trump came third on this survey as being a good for businesses and economy. So a majority of 55% chose a Democratic nominee Hillary, followed distantly by Gary, which is 15%, and Donald Trump, which is 14%. So why is this? So I'm going to walk you through what each of these candidates are saying in terms of plans to see. Well, you can also obviously do the conclusion and see what you think. These are obviously overly simplified, but so simply put, Hillary wants to raise the taxes on the rich, while Donald Trump wants to cut taxes for large companies. He wants to reduce the corporate tax rate from 35% to 15%. And it's a move that has typically played well with businesses, but this election economy is worried about the bigger picture. And and he is also tapping on another issue, which is immigration, globalization. So immigration is a top issue for business economists. 61% of that survey respondents said that the U.S. needs to allow more immigrants, especially for workers with top skills. And Hillary has a plan to increase highly skilled immigration, and that is the so-called, well, my interns have it, the H-1B visa program. She also wants to create a route citizenship for immigrants in the U.S. illegally. And so 65% of the economists also say that the next president has to be more open to free trade, exactly the opposite of what Trump has been preaching on his campaign trail, which has been basically anti-globalization. Right, so Trump has been clear that he thinks America is a loser on trade and that the U.S. needs to fight back against China and Mexico and other countries. And there are concerns that he wants to put on goods coming to the U.S. from China and Mexico on a ban on these goods, and that would cause a trade war in addition to making a lot of products more expensive for Americans. So for example, think about it. Right now, an iPhone is called, a brand new iPhone, if you want to buy it, is around $900 in the U.S., while all the components are built in China on, well, minimal wages. And if you want to produce the same iPhone in the U.S. with, well, U.S. wages, that same iPhone would be at least minimum $3,000 to purchase. So of course, that would create massive inflation, not inflation, but massive product increase of a rate of products, and that could bring the consumer confidence down, and businesses could be affected by it. So so there is this other survey of over 414 economists who work in all different industries, from construction to finance, and this survey was done conducted from July 20th to August 2nd, which is, well, pretty recent. And so all of those members also favored Clinton to lead the economy. They say that overall uncertainty from this election is holding back the U.S. economic growth. So what else? So let's get into detail and see what are each of these candidates saying about, well, real issues. Like let's get into detail and see how these things, how these, what their views are on economic issues. So let's start with national debt. So Hillary well, I'm quoting Hillary from one of her December rallies. She said that when my husband left the White House, we had a balanced budget and a surplus. And if we had stayed on a responsible fiscal path, we could have paid off our entire national debt. So she has repeatedly gone against her rivals, including Trump and before it was Bernie Sanders, for putting forward policy proposals that could basically that could resolve the budget deficits. And well, she hasn't exactly outlined specific steps to balance budgets, and she has, for the most part, ensured that new spending programs are paid from a budgeting standpoint. And so these budgeting standpoints are usually through higher taxes on the higher income households that we talked about before. And the Committee for a Responsible Federal Budget, which is an organization that advocates for debt reduction, estimates that Hillary's spending and tax policies would essentially hold the national debt on the trajectory it faces under current law. But meanwhile, Donald Trump, let's quote him, well, he is obviously against debt, but he also has said that he loves debt because he is in debt, well, massively as a business person. He actually cannot even borrow money from American banks anymore, and there is a rumor that he's been borrowing money from Russia. But he has said that we've got to get rid of these $19 trillion in debt, and I think he thinks, I'm quoting, we could do it fairly quickly over a period of 8 years. And he has made a number of sometimes contradictory statements on the public debt. In March, he said that unleashing stronger economic growth would allow the U.S. begin paying off the national debt, and that is something that no budget analyst sees to be possible at the moment. And later, in other interviews in spring, he said that he might try to renegotiate the national debt, and then he reversed his course a few days after that in a May interview with the Wall Street Journal that he wouldn't do anything to alter the terms of that debt, which he calls absolutely sacred. So he's been flip-flopping a little bit on national debt. And meanwhile, well, a lot of people are saying, oh, he's going to surround himself by smart people. So far, we don't know. Well, his cabinet has been a little bit of a interesting, uncertain point. So what we can take away from this for the national debt policy is that Trump has been flip-flopping. That creates uncertainty, and uncertainty creates volatility, and the markets get a little bit scared on that, all right? So that is for national debt. Next, we have on the Fed, the Federal Reserve. What are their views on the Fed, which is, well, our main interest as Forex traders? So Hillary hasn't really commented on the interest rates yet. She has said, well, she's pro common sense reforms like getting bankers off the boards of regional Federal Reserve banks, and that is long overdue. So she has supported the efforts by activist groups and progressive lawmakers to remove bankers from the boards of Federal Reserve's 12 regional reserve banks. And her campaign has said that if she's elected, she would appoint officials who will carry out unwavering oversight of the financial sector and defend both sides of the central bank's inflation and employment mandates. And so she said that she would work to end the revolving door between Washington and Wall Street. But it is not clear how exactly she would want to do that. When it comes to Donald Trump, again, he has flip-flopped a little bit on his stance. At one point, he said that he's not a person that thinks Janet Yellen is doing a bad job and he happens to be a low interest rate person unless inflation rears its ugly head, which can happen at some point. So that is what he said at before. And at the same time, I don't know when, a little bit later or before that, he had said that lawmakers for years have complained that, well, okay, let's actually put it this way. So Republicans in general, which is, I repeat myself, is the a party of Donald Trump, they have complained that Fed's easy money policies, the quantitative easings, are not good, and that will lead to a spike in inflation and create dangerous risks in the financial system. So they are anti-quantitative easings, and they've pressed Fed's chairwoman Janet Yellen to justify why rates should remain low. So the Republicans are basically pushing for a rate hike. However, Trump, well, as I said before, he has taken a softer stance at some point. He has told that he is not an enemy of the Fed and he doesn't think that Janet Yellen is doing a bad job. But he has said that he will eventually would want to replace her with a Republican nominee. On monetary policy, he has said that in November, Miss Yellen should have raised interest rates and suggested that she hadn't because of political reasons. But then he switched his stance and he called himself a low interest rate person. So again, it's a little bit unclear. So on the Fed, we can see that he is not a typical Republican. So we could have, if a normal Republican candidate would have been now running for president, we could have will suspect that we're going to have higher interest rates pretty soon. However, with Donald Trump, we're quite unsure about that. All right. So now I want to get into an interesting topic. We have covered Brexit before. Everybody remember Brexit and what happened to the British pound? And well, I had been saying that if Brexit happens, we can very well see a Trump presidency. And Brexit did happen. And now the Brexit leader, Nigel Farage, endorsed Donald Trump. I believe it was last night. Although he had said before that he doesn't want to get involved, and he had criticized President Obama for getting involved before, but now he came to the U.S. and he endorsed Donald Trump. And so a little bit about Nigel. He false advertised to win Brexit. After Brexit voters won that referendum, it turned out that a lot of the things that he had promised were false. And a lot of British people, as far as I understand, thought that they were blindsided and they were lied to. And well, on Brexit, as we all witnessed, the British pound and the UK markets all fell massively the day after. And right now, it's kind of recovering. British pound right now is on its way to a little bit of a recovery for technical reasons. But the fact of the matter is that, well, after the vote, the essential steps to actually make Brexit happen haven't been taken. So we could see a potential storm or a wave of pressure on British pound and UK markets when and if the next wave of Brexit talks is going to come to the surface, potentially in spring. So what can we learn about this? First of all, so Trump was in favor of Brexit himself. He went to Scotland after Brexit vote, and meanwhile, Scotland largely voted to remain in the EU, and he went over there and he said, "Oh, this is great," and well, people over there now obviously hate Trump. But these two people have, well, a bunch of stuff in common. One is that they're both the underdog. So nobody thought that Brexit would happen. The polls show that Brexit won't happen and the voters won't do it. And so is Donald Trump. Right now, Donald Trump is way behind Hillary Clinton in polls. But so the matter of the fact is that, well, as we saw with Brexit, we definitely cannot trust the polls on this because, well, we saw what happened with Brexit. Even though it was very, very small, it was, I believe it was about 52 to 49% of the vote difference when with referendum in the UK, but Brexiters won. And so for that reason, this is a very important thing to keep in mind. The fact that Farage is endorsing Donald Trump shows that obviously they have this character in common. They're anti-globalization, and, well, as a lot of people on social media put it, they're both con artists because they both lie a lot. So with that, what can we expect from the US dollar in these two different scenarios? So let's take a look at the technical charts for this, right? I'm going to go to, and we're going to bring up our charts. All right, so everybody can see the chart? All right, so again, let's go back. All right, well, since we were talking about British pound, let's take a look at the pound dollar chart first and see what happened. So this is what happened at the day of the Brexit. This is how much the British pound dropped. And right now it has formed a double bottom, and we could see a little bit of a recovery. I mean, still it is at all-time low levels, beginning of the history of British pound. But it is a little bit, well, it is recovering probably just a little bit right now. This is the historical chart, the monthly chart going back to 1994. It has never been this low. Right now it's at the 131 level. The next stop would be at 135. So I do believe that, well, this market could correct itself. But the reason why the British pound dropped so massively on the referendum, well, one of it was because it was unexpected. And there was a lot of uncertainty behind it because people don't know, the market participants don't know what's going to happen. So our uncertainty definitely puts pressure on an indice that you're trying to trade. And so with the fundamental analysis that I just did, I do believe that we can all agree that a Trump presidency, especially right after the elections, could bring a lot of uncertainty because he has been changing his views. He doesn't have the experience of being a politician. I mean, I'm not going to say that, okay, Trump is completely bad. I'm not going to take a political stand over here, but he is going to bring uncertainty. And uncertainty is going to weigh on the market, not to mention that he's anti-globalization. So if he's going to, so for so many different reasons, U.S. dollar could be under massive pressure if Trump becomes president. He is trade with China. He wants to stop China. He wants to start a trade war with China. And we all know that every time that China is in trouble, U.S. dollar goes down. So that could also be the case for if well, the U.S. has a problem with China. We could see that happen. But before that, I just wanted to show you this historical chart. So let's forget that this is a war between Hillary and Trump. Right? Let's take a look at it as a Republican and a Democratic standpoint, and see historically how the markets have reacted to Democrats versus, and how they have performed under a Democratic president versus a Republican president. So let's find Dow Jones. Okay. So this is again the monthly chart of Dow Jones Industrial Average. Let's go from now to before. Right now we are under a Democratic president, President Obama. He got elected in 2008, and since then the Dow Jones has been just going up nonstop on a very all right, I think we lost audio connection for a second. All right, I'm back. So during the Democratic Obama, we had growth of Dow Jones, consistent growth of the stock market in the U.S. Before that, we had George W. Bush, which was a Republican candidate. He was president of the U.S. From 2002, right? I believe it was, no, it was 2000, I'm sorry. It was from 2000 to 2008. So you can see a very interesting contrast between these two. So during Bush's presidency, the market, well, it did have a period of growth, but before that, so we have 9/11 happening as well in 2001, but before that, it was mostly consolidating, going down. We had a period of growth, and then we had the market crash. Before that, we had Bill Clinton, again, a Democratic president. And during that period, again, we can see that the stock market consistently went up. So we had a very similar pattern during the Democratic president. The markets grow, while, so before, again, George W. Bush, I believe I wasn't born then, but I believe he was a Republican. Again, it was Bush's father. Correct me if I'm wrong. So during that period also, we saw a market consolidation during the Republican. So, well, this is the past, well, 20 plus years, the modern economy and how the markets have reacted. So we can vividly see on this chart that under Democrats, the markets have performed better. And we can blame it on different things, and the market crash and the subprime loan and the 9/11 attacks. But generally, this is what we are seeing. We've had our share of market panic during Obama as well as we did during Clinton, but it obviously didn't crash the market. It didn't enforce as big of a force on the markets as it did during the Republicans. So some of the reasons why. So the interesting point is that a lot of people think that, well, Wall Street is mainly Republican, and they support Republican presidents. So why is it that the markets perform better under Democrats? So that is because, well, Wall Street bankers favor Republicans because they allow the loopholes in Wall Street that benefits the rich of the Wall Street, while the general market participants, the retail traders, they don't benefit from it, right? While during the Democratic presidency, that is, well, less of a case, and they close the loopholes, and they focus more on the middle class, and that is why a majority of market participants will benefit from the stock market. More people invest in the stock market, so there is more demand for the stock market, which eventually raises the price of the stocks and pushes the stock market higher up. All right, so this is the stock market. So if you are a stock trader, just so you know, a strategy for if Trump wins, we could definitely expect a market crash, even if it's short-lived. But for a trader, that could actually be a good time to buy. So part of me want to see what happens if Trump wins, because then I can buy a ton of stuff at a bargain price and make my portfolio look better. But at the same time, a Trump presidency can very well bring the next World War, which could eventually just crash the markets for the 4 or 8 years that he is going to be a president. So it is a little bit of a bittersweet. So let's take a look at the US dollar. How has the US dollar index performed under a Democrat president versus a Republican president? I think the US dollar index here. I just want to take a look at the index. Bear with me for 1 second. I mean, we can take a look at the pairs as well. There it is. So this is actually a relatively new index. So we can't really go back in time. So let's take a look at the other US dollar index, which is the DXY. Let's take a look at DXY. Okay, this one does go back. So let's take a look at here. So this is, again, it doesn't go all the way back, but so let's go back from 2016 under Obama. Well, this is a little bit more volatile, obviously, and it has to do a lot with so many other foreign factors as well. But let's just take a look. So under Obama, from 2008, we had this, well, we had the market crash. The US dollar value went down. We had this formation, this double top. And then after his second term in 2012 up until now, it has generally been going up. In the past year, well, November 2015, it has been correcting a little bit, but it has been, so basically consolidation, volatile consolidation and growth. Now let's take a look under President Bush from 2000 to 2008. So from when he was elected in November, market US dollar lost its value massively. Crazy up until 2008. So we had a bit of a consolidation and a correction, but Bush was basically a disaster for the US dollar value. Before that, we had President Clinton. And so during that period, so we had a little bit of, in November in 1994, so it's from here, we had a bit of a correction, but then again, the US dollar index grew until, well, grew up until here. Okay, so we had the growth, so we had consolidation, but mostly growth up until 2000. Under Bush, it continued its growth. It changed a little bit more into consolidation. We had this triple top formation over here, and then we had this massive crash. And then before that, 1994, during the time of the big Bush, again, the U.S. dollar market index crashed during the previous Republican president. So if history repeats itself, and these are normal Republican candidates. These are not Donald Trumps. These are normal Republican candidates, and we see vividly the crash of the markets during these. So if I were to guess, if Donald Trump was to become president, with all the uncertainties that he brings on the table, which is far more additional uncertainty comparing to a normal Republican president, we could see a massive U.S. dollar devaluation, as well as the U.S. markets, the stock market. So with that, what are we going to do from now up until November? Right now, all that we can rely on is obviously the polls in the stock market. There is a theory that says the stock market can predict a presidential nominee, but this has been before. It did predict the Brexit happening as well. What it says is that if the stock market grows during the 3-month period before the elections, the left will win. So right now, this is the monthly chart. The 3-month period has just been started. And we are seeing a little bit of a slowdown in August. It has been consolidating the Dow Jones Industrial Average. I was hoping to see more of a growth because what this survey, what this is based on is that if the market grows, then we will have Hillary win. And if it doesn't, then we will have Trump win because of all the uncertainty and the market's speculation on who's going to win. So right now is a little bit of a gray area. It's consolidating, even falling the past 3 days. So it's a little bit worrisome. So what we're going to do in the next 2 months, if we're going to trade, is that this. Why? The US dollar index has been going up. So that is a little bit of a good sign perhaps. But what are we going to do up until from now until election? It's very volatile. And the polls right now are showing Hillary is winning, but we don't really know for sure. So for those of you who want to trade the US dollar before the elections, I really do recommend that you have to obviously trade it versus another currency. So I do recommend that you put your analysis before November on the cross currency and the economy of that country. So if you want to trade the dollar-yen pair, really do your homework on the Japanese yen more so than on the US dollar, because we're going to have a shaky road in the next 2 months. And with the Fed also not really hinting what is going on with the rate hike plan, it's a little bit risky. But what we can do is waiting for the election day. So how are we going to trade the election day? Well, we obviously are going to follow the polls. Did anybody trade Brexit in this room? I know a bunch of you have, because I know you personally. And those of you who did lost money massively because the polls were saying something and the result was something else, and volatility was incredible. And nobody thought that the market is going to drop that much. So my recommendation again for you is that if you're going to trade any dollar crosses, do it either up until 1 week before the U.S. election in November. And that would be actually, let me give you the exact date, it's November 8th and Tuesday. So my biggest recommendation is that do not trade any US dollar crosses on November 8th. It is a little bit more over 2 months from now. But if you want to do any kind of trading, do it before that. And then stop, because the volatility is going to be crazy. And then we're going to have another, where we're going to have the results on November 8th. So if Trump wins, based on what we just saw, and based on the fundamentals, and based on his policies, and based on the technical analysis, we could expect the US dollar to devalue incredibly on the announcement of the results. So that could be one bearish scenario for you, for traders. So if you're trading the dollar yen, you want to go bearish. And if by then the US dollar hasn't reached 96, which it very well could, you want to go bearish in dollar yen and target one of the historical levels from back in the crash of the market in 2008 and move forward. So our bearish targets for dollar yen, for example, in case of a Trump presidency, let's actually do a Fibonacci analysis on this. Right? So right now it is kind of testing below the 50%, but we could very well see the market to reach 95. In case of a Trump presidency, we could see it going to the 88 level. So that could be a bearish scenario. If Hillary wins, that is going to be a little bit more complicated. We could probably see a little bit of a volatility for sure. But then we're going to see a little bit more of a consolidation, and potentially the US dollar would regain its strength. Because also keep in mind that the governor of Bank of Japan, he is not, I mean, well, Japanese people are thinking that Americans are completely crazy for having a candidate like Trump. So that could really also impact the relationship between Japan and the U.S. Because Trump has also said before that he really hates the fact that Japan devalues its currency a lot. So he might put pressure on Japanese Bank of Japan not to devalue their currency, and that could also put more pressure on the dollar yen. In case of a Trump presidency, again, we're going to see massive drops in the dollar yen pair. In case of Hillary, we're going to see a correction. Let's take a look at, well, pound to dollar is a little bit of a controversial, because by then we're going to have Brexit talks as well, so it's going to be very, very volatile. I really do recommend that during and after November, do not trade pound, but right now, just pound, right? A little bit of a, for those of you who follow me who are members of Investiva community, you saw that reversal signal that we sent out to our followers. What happened here? See. So we saw the reversal actually coming up. So right now I am actually bullish on pound. If you missed this, definitely go to investiva.com and check out my article on British pound for strategies on that. All right, but this is short term. Going into November, I strongly recommend that you don't trade the British pound versus the US dollar. Another dollar cross, let's see. Let's talk about Aussie dollar. Let's see what Aussie dollar could go in case of a Trump presidency versus a Hillary presidency. So Aussie dollar, the Australian dollar comes first. That means a US dollar devaluation, a US dollar weakness would send the Aussie dollar pair in which direction? All right, those of you who are sleeping. Adam, which direction will the Aussie dollar go if the US dollar becomes weaker? We need your answers, Alex. All right, Michael. Up. Very good. Exactly. Bullish, Melissa. Correct. Yes. So, north. Yes. RT London. Correct. Michael, thank you. Yes, exactly. Everybody's right. So in case of a Trump presidency, we could see an Aussie dollar reversal. Right now it has been consolidating. So let's take a look at the monthly chart and see what it's been doing. We have the monthly chart, right? Oops. So it obviously has been going down because of the US dollar strength, as well as, well, Australian dollar has been devaluating. Right now it's kind of consolidating, has been testing the 76 level for the second time in the past, in 2016. It could have actually, technically we could say that it actually has bottomed out, which is a little bit, worrisome, that this could be an indication that Trump is actually going to become president. So if Trump becomes president, right, what levels can we aim for our bullish strategy? And this is obviously mainly based on the US dollar. We also have to put into consideration the Australian economic overview. But regardless, well, it's 2.5 months from now, so we don't know where it could be at the time. But these are the levels. I just used a Fibonacci retracement level. So the levels that we could aim for, we could even see a reversal, a massive reversal back to even parity in case of a Trump presidency. Meanwhile, so that would be a massive one-day rally right at the result. Meanwhile, if Clinton becomes president, that is going to be the technicals will do their ordinary. Our focus will shift on the Fed and interest rates to get signals for the U.S. dollar. You see, so right now there are so many factors that are playing a role in the U.S. dollar strength. Well, obviously we have the Fed, we have employment rates, we have inflation, interest rate, all these stuff, as well as politics. A Trump presidency will bring all the focus on the elections, and that would cause a massive rally in the Aussie dollar pair, while a Clinton presidency would switch our focus on the Fed. Is it going to hike the interest rates in December? And while Hillary hasn't really signaled what she would do, she might be okay even with it. So there is a better chance of seeing a rate hike if Hillary becomes president, because the Fed, especially Janet Yellen, she's very cautious, and she doesn't do anything crazy in times of uncertainty. So we can see there is a better chance of a rate hike from the Fed if Hillary becomes president. So that could really make the U.S. dollar stronger, and therefore the Aussie dollar pair could again go back down. And although, this definitely, in case of a currency trading, we have seen the cycle has been going on. So the technicals are a little bit at odds with this. The dollar-yen pair is a little bit better of a candidate if you're trading the elections, because here, technically, we kind of have seen the reversal. So if Hillary does become president, we could see a strength in the U.S. dollar, but it might not be enough to send the Aussie dollar pair below 0.70, right? Because this kind of is the range. I mean, we could see a little bit more going back to the 2001 or maybe even 2008 levels, but it won't be that much. We could see a little bit more of a consolidation, and then a natural correction to go back with the technical analysis, the natural market cycle when it comes to pairs. Donald Trump will be volatile, crazy, one day make it all. So that could definitely bring up some possibilities for you guys to make money. I think I did cover most of the things that I wanted to cover with the US. So I did want to just, well, in case you didn't know, this is what I look like. This is me, myself, and I. And if you have questions about Forex trading, definitely, if you're a beginner, go buy my book. We have a new edition with a lot of secrets, 30 new secrets in the book that you can take a look at. If you want to, oh, we have some new stuff coming up, by the way. So this is our beginners Forex course. If you go to investiva.com, this is the beginners Forex course with all you need to know about technical analysis, focuses on technical analysis actually. And if you need to know how to manage your finances, how to manage your wealth, how to actually, are you eligible to trade Forex, how much money you should trade in Forex, how much leverage you should take, what is your risk tolerance, all of that, it's very personal. Take a lesson with me privately, and we will get you on top of your investment. So go to investiva.com, book your personal financial therapy session with me. We're going to do it over Skype, and we'll just go over all your financial goals, all of your financial health problems, and fix it. So that's that. The rest are coming soon. And next, last but not least, if you have any questions, if you want us to cover any topic that you might like, definitely go ahead on orbex.com, email them at info@orbex.com, and tell them, hey, I want you to cover this and that. And they're very cooperative with that kind of stuff. So last, do you guys have any questions that I mean, we have like 3 minutes, but if you have any questions that I can answer in 3 minutes, please go ahead and ask me. You have been great, guys. Like, everybody was very interactive, and it's been great. So definitely just be careful when you're trading the U.S. elections. And if you have questions, I'm getting questions right now. If you have questions, definitely just send it over to orbex.com. Let me see. I have like 2 minutes. We're gonna. Okay, we have a request of covering euro dollar. I'll cover it up in like 2 minutes that we have. All right. So the euro dollar has been consolidating for over 2 years now, for a year and a half. And with that, Trump presidency, again, it's very similar to Australian dollar. The Trump presidency could bring a, well, temporary at least, bullish move in the euro dollar. We could see 122 as our target, while Hillary presidency could, well, make the pair continue with this within the range that it has been continuing. And also, again, with the euro dollar, it's very similar to pound in a sense that we also have to be wary of what the pound, what direction Brexit is taking. So the final word of advice is that whatever happened with Brexit could happen in case of a Trump presidency. So just follow the route of pound and apply it to your trade if Trump is elected president. All right? Okay, guys, you've been great. Thank you so much, and hopefully I'll see you in our next webinar.